only on Bloomberg Quint.
Hello and welcome. You're watching Countdown with us on Bloomberg Quint Live, India's first digital live streaming business news service. Well, markets are trading around the all-time high levels that we've seen today. In fact, Bank Nifty also crossed the 28,000 mark for the first time in trade. Let me quickly tell you what's happening on the option side of the data. Let's just pull up the Nifty futures as well as the Bank Nifty futures and tell you what sort of open interest action has been witnessed there. In fact, the Bank Nifty futures in the last few trading sessions has been witnessing some amount of OI addition. So 9% right now, that's telling you more of long positions are being taken there. 60 points is the premium for Bank Nifty. Nifty futures premium yesterday was almost about 25. So that's also declined to almost 20 points. But one positive takeaway in terms of options data, I would just like to highlight. Yesterday, in fact, we were talking about this one. Despite of markets inching higher, we're not seeing any sort of unwinding on the 11,500 call, which is sitting with maximum open interest. In fact, today's the day that the call writers are actually running for cover. Some sort of, not too much, but almost 1 lakh shares have been shed there. So watch out for that. And heavy put writing has come in for the 11,400 put strike. And if one were to go by the premium on the 11,400 put, it suggests that the put writers at this strike will be safe till the time index trades above the mark or around the mark of 11,300. It's just 3 stock futures I want to address right, Shasun. The numbers came out today. The stock surge post the numbers. At the operating front, there was some bit of margin expansion seen. Fresh long positions have been seen here as well. And if you look at the volumes, that especially on the cash side have been on the higher side. The AVAT function of Bloomberg will show you the estimated volume for today. The blue line is the average volume of last 20 days, and the white one is telling you the indicated volumes for today. Voltas is the other one. On the long side, open interest has surged quite significantly once again on back of high volumes. The earnings for this one come out in August 10. So watch out for this one too. PVR, in fact, the entire media stocks are buzzing ahead of the hearing. With regard to the ban on outside food, let's see what sort of outcome comes from there. But the stock has rebounded quite well from its 52-week low, which was seen on July 12th. Remember, the stock had fallen to levels of 1,060 or thereabouts. From there, it's been a recovery of nearly 17 to 18%, Neeraj.
Okay, some numbers on your screen, Lupin, and from the face of it, looks a number which is below estimates. Revenues too marginally lower, 3855 or thereabouts is the revenue number. The expectations was about 4,092, 3856, yes. Consolidated net profit at 202 crores. Our estimates were 347 crores. So it was expected to be down about 3%. I think this one, with these numbers, is down by about... 27, 28 odd percent, or 20, anywhere between 25 to 30% on the just back of the envelope calculation. So the numbers optically don't look as great. Watching out for the margin number 2, the expectation was 18.2. Now, yes, the increased competition on Methergine as well as Glumetza was anyways going to dent US revenues. There seems to have been some more dent to those numbers, and I'm guessing that there is some miss or some one-off that's happened. Okay, EBITDA is down 32%. At 527 crores or thereabouts. The estimates were that the EBITDA would hold fort at about 745, which is flattish. That hasn't happened. So revenues about slightly off from what the estimates were, but clearly pressure seen on the cost front, as a result of which the EBITDA is down, and thereby the profits have come off quite rapidly as well. Darshan should be joining us any moment, but on the face of it, Navneet, a very poor set of numbers. Let's just get the stock up on the screen as well. Marginally in the green, but the intraday of the stock should be interesting. Yeah, just a bit of a initial quick reaction that we have on Lupin. Do we have Darshan? Okay, we'll have Darshan, but we have Avinash Gorakhshekhar for sure. So let's just go and get a quick perspective from him. Avinash, your initial thoughts on these numbers?
No, I think Neeraj, numbers definitely were in line because there was definitely pressure on the margins, and bottom line was expected to be down. But I think clearly in terms of the operational performance, I think the EBITDA margins have actually fallen much more than what our expectations were. So I think one would like to know, what has been the reason for a sharp increase in the cost, especially on the input cost side. I think overall top line, has been more or less in line, but I think the cost pressure seems to have been much more than what the street anticipated.
Well, Avinash, cost of materials definitely has gone up, and considering there's no growth on the revenue front, I'm presuming as a percentage of sales, the raw material cost definitely has inched higher for this quarter. In fact, the finance cost has come in at 687 versus 439, so that's the other factor, I guess, which would have dented the bottom line. But overall, looking at these numbers, Avinash, one factor which everyone talks about, the pricing pressure in the entire pharma pack. We spoke to the management of Strides Shasan. I think their margins saw a bit of expansion, and Mr. Arun Kumar sounded quite bullish for the second half of this financial year with regard to the US business, and they don't expect more of pricing pressure. Any thoughts on that one?
Yeah, I think, Navneet, most of the pricing pressure now seems to have been abated at least for some time, because clearly we have seen a lot of underperformance from most of the Indian pharma companies operating in the US, facing the margin issue problem. So I would believe that, yes, the second half of, should be definitely be better. And hopefully, we see a better traction in top line also. That would also lead to a better contribution to the overall improvement in margins as well as the overall EBITDA number. So I think it's too early to take a call, but I would believe the third and the fourth quarter should definitely be better. Hopefully, if there are no further regulatory issues and, typically pricing concerns, from the US market. So I think in and all, the second half should be better for companies like Sun or maybe a Lupin, which have got large exposure to the US market.
Darshan is with us as well. Darshan, what have you made of these numbers?
So it seems like an extremely weak set of numbers. Revenues come in at 3856 crores. Our estimate was close to 4100 crores. So there's a straight top line miss, which led to weakness all across. EBITDA miss, 527 crores is the EBITDA that came in versus an estimate of 745, and EBITDA margins at 13.7% versus 18.2%. That was the estimate, and that trickled down lower to the profit number, which came in at 202 crores versus our expectation of almost 347 crores. So it's a clear miss, that's all across. Some of the details, they haven't shared the press release in terms of what's happened where, but the costs are extremely high this time around. If you're looking at the cost of raw materials, they have grown drastically. Tax rate is much higher. 47% is the tax rate this time around compared to 21% that was there last time around. And the other income stands at almost 184 crores compared to almost 31 crores that was last time around. So that is something that, despite having higher other income, the numbers are not still good for Lupin this time around. We'll wait for a while. The press release comes in after 5-7 minutes. We'll try to get in more details, and I'll forward you all the details in terms of what exactly has gone wrong.
In fact, Darshan, I've just got the press release here, which gives me the sales mix on year-on-year basis. Darshan, North America business has seen a downtick in terms of the revenue front of almost 26%.
Yeah, so that's it. So we were anticipating a revenue growth of 15% drop over last year. So I think $203 million was the estimate. So that's the big miss, another 10 percentage point downside. Any other number that you have?
Sure, and I think the other, sequentially also, Darshan, North America has seen a downtick of 20%.
Yeah, that's also much higher compared to our estimate of 10%.
And most of the, actually it's across the regions, North America, India, APAC, EMEA, rest of the world, LATAM, all of them sequentially have seen a downtick, but only EMEA, Darshan, on year-on-year basis has seen a growth of 22%.
Yeah, so I'm seeing that. That's what I'm seeing. North America is down 21% QOQ. That's bad here. India has seen growth of 23%, 24% on a quarter-on-quarter basis. They've said that adjusted for excise, India growth on a year-on-year basis is 30%. Pretty much, it's slightly better than what we were anticipating, so that is done well. The other factor is the fact that the rest of the world is down 30%. Latin America is down 1%. EMEA is up 22%. Yes, I can. Let's see the other factors that were there. So North America is what they're saying is that they haven't said much on what went wrong, but overall I think it's the North America miss that has caused them issues as far as their overall numbers are concerned. Overall weak set of numbers from Lupin, nothing much to speak about there. So that's what I am seeing at this point of time.
Well, clearly, and you can see the stock reaction there. The stock's down almost 2% in trade. Darshan, do you want to take any questions with Avinash if he's still there with us?
Avinash, are you there?
Yeah.
Yeah, so Avinash, basically North America is down 26% on a YOY basis, so that's something not helping. What kind of numbers are you seeing? Because India has grown. I think North America, a 26% degrowth is something that has actually impacted the numbers for them. What do you make of the future of Lupin, given the fact that North America is not contributing to them?
No, I think clearly, even in the last conference call, the management was not very upbeat on the US business. So I would believe that, I think at least for one more quarter, we could see a little bit of weakness on the North American market, and any recovery, if any, does come. I think we'll have to be driven by the North American market, because this is a large chunk of business for Lupin, and hopefully only in the second half, some recovery could be seen. But at least in the near term, this underperformance, my senses, should continue. And I think margin pressure, as long as, top line doesn't grow and input cost goes, definitely this is not a good performance, and markets will obviously not be very pleasantly happy about it, because going forward, margin pressure was anticipated, but this is something much more than what, the street expected in terms of the negative surprise on earnings.
Okay, thanks so much, Avinash. Back to you guys. I don't think I have the US sales number, $168 million. 203 was expected, so that's the big miss that's coming in. India's done well. The other regions have also done decently, but the mainstay where they are facing immense competition, immense pricing pressure, hardly any launches. Gavis is not working. That is US. That is clearly not working for them.
Okay, Darshan, thanks for putting that into perspective. Clearly showing on the stock as well, there is a bit of pressure on that counter in the session today. So do watch out for Lupin. Okay, while we are at earnings, let's just have a quick interaction with the management of Dwarikesh Sugar as well. Revenue is down 24%, profits down 47%, margins have come off. None of these would be a surprise for anybody who's watched sugar clearly, but there was still some impact on the stock. The Cogen revenues, though, have doubled to about 60 crores versus 30 crores. Let's just get a quick perspective on the numbers. The Managing Director, Vijay Banka, joins us right now on the show. Good having you, Mr. Banka. Thanks for joining in. How would you summarize the quarter? I guess right now, over the last quarter, sugar prices have moved up a bit. Can we expect to see some change for the positive in the quarters, in the current quarter, or maybe the quarter ahead of the crushing season?
Very good afternoon. You see, the first quarter was a very challenging quarter. The sales realized, the average price at which we sold sugar was at 2,800 rupees vis-a-vis 3,570 rupees plus average realization which we got in the same quarter last year. So realization down by 770 rupees per quintal clearly explains the poor performance of our sugar segment. Well, we extended the crushing, continued beyond April. In two of our plants, we crushed sugarcane in the month of May, which is why we produced more, we generated more power, we sold more power. So the segmental profit of the power division is good. Distillery, again, the molasses costs were extremely low, so which is what explains the better performance of the distillery segment. Yes, you are very right when you said the sugar prices have now recovered. In fact, the government introduced reintroduced monthly release mechanism. They have also fixed a minimum threshold price for sale of sugar, which is 2,900. They also created buffer stock of 3 million tons. So all these measures have contributed to recovery in the sugar prices. Sugar prices, which had touched a low of 2,600 in the month of May 2018, has now recovered to about more than 3,200. So we see the sugar prices remaining stable, but the question is, the higher prices at what cost? We are actually selling Our sales is, in terms of quantity, is extremely restricted because we are under compulsion to sell quantity as indicated by the government. So the stockpile continues, and that is not helping the cause of the industry. But yes, the sales realizations are better, so this certainly augurs well for the coming quarters if the prices remain better.
Sure.
But yes, the fundamental problem still persists. The government has to address the problem of stockpile on the sugar industry, and next year we are staring at the possibility of yet another record production season. So we will have to evacuate, the industry and the government have to sit together and work out ways and means of evacuating at least about 6-7 million tons of sugar out of the country, which is what will help restore the balance in the domestic sugar industry.
Sure. In fact, you've highlighted the main factors why the numbers have not looked so great. There was highest ever production that was seen for the last quarter, and also the prices were lower. But you've also highlighted because of certain measures being taken by the government, we've seen prices now inching higher. I just want to get a check on realizations, which fell almost 700 rupees per quintal in the first quarter. Can we expect a better number from 2,800, which was seen in the first quarter?
Certainly, certainly. In fact, our July realization, the July month which is already concluded, our realizations have been higher than 3,200 rupees a quintal. So we certainly see improvement in the realization.
Okay, and during
this realization, given the fact that the yep.
Make your point, sir. Go ahead.
Yeah, well, given the fact that the sugar is going to be restrictively sold in the months to come in August, because this release mechanism, as announced, is in force at least until the 30th of September. So we will have restricted quantitative sales in the month of August and September, and which augurs well as far as the sugar price realizations are concerned.
Okay, just
so
one
we
more.
should expect better realization in the month of August as well as September.
All right, let's hope for better realizations going ahead. Just one more question from my side. Usually there's a lot of inventory which is seen at the end of financial year. How much of that inventory were you able to liquidate in the first quarter? And also, if you could tell us, what's the current inventory value which is there on the books?
Well, in the first quarter, we have sold about 12.20 lakh quintals of sugar. We began the quarter with an inventory of 19.11 lakh quintals. We produced another 9.2 lakh quintals of sugar in this quarter, and out of which we have sold about 12.2 lakh quintals. So we are still sitting on an inventory of 16 lakh 23,000 quintals. So, which is valued at the, out of which, sugar is valued at 2,900, which is the minimum support price, minimum selling price, which the government has announced.
Okay, Mr. Banka, I wish you all the best for the quarters ahead. Hopefully, the next quarter is a much better one than the current one. Thanks for taking the time out and being with us.
We hope so. Thank you very much. Thank you very much.
That's Dwarikesh Sugar with their thoughts on what the quarter ahead could look like. Okay, let's talk about some key numbers and some key earnings that you should keep at the back of your mind. Firstly, two of the state-owned refiners will announce their numbers today. Both HPCL and BPCL are expected to be hit by rising crude prices. Samit is standing by, but what should one watch out for? Samit.
So for HPCL, if we see the headline numbers, now though the revenue is expected to be higher at close to 70,900 crore rupees, the net profit of the company is expected to decline by close to 17% to 1,444 crore rupees. EBITDA is also expected to decline by close to 12%, while the margins are expected to contract to 3.6%. For BPCL, same, the headline revenue number is expected to be higher by 16%, but the net profit is expected to be lower by close to 23%. EBITDA is expected to fall by around 11%, while the margins are expected to contract to 4.4% in the first quarter of financial year 2018. Now, this is expected to be a weak quarter for both the oil marketing companies on the back of weak core performance. However, inventory gains could be one of the surprise factor in this quarter. Now, if you see the refining business, and that is expected to be subdued because of the flat crude crude throughput in this quarter, also because of weaker gross refining margins. But as crude averaged around $75 per barrel in first quarter versus $67 per barrel in the fourth quarter, inventory gains is something that could save these oil marketing companies in the first quarter of financial year 2019. Also, the gross refining margins could be higher because of this inventory gains that the companies are expected to report. Now, on the marketing side, if you see, the volume numbers are expected to be higher for both the oil marketing companies compared to last quarter. However, due to weaker fuel margins, the marketing segment overall would report a weak set of numbers. Now, the gross marketing margins earned on sale of every liter of petrol and diesel. Now that has declined for petrol to around 1.5 rupees per liter. That is a nearly 53% lower compared to last quarter. While for diesel, it has averaged around 1.9 rupees per liter. That is a drop of 44% compared to last quarter. So these things will keep the marketing segment under check for the oil marketing companies. Lastly, key things to watch out for would include management commentary on the current status of the Vishag refinery expansion project, that is for HPCL, and for BPCL, if you see, the management commentary on Kochi refinery expansion and the stabilization would be a keen thing to watch out for. Now, along with this, management commentary and outlook on gross refining margin, gross marketing margin, and any update on the capital expenditure plan would also be a keen thing to watch out for in this earnings.
Okay, Soumi, thanks a lot for bringing those estimates which the street will be watching out with regard to the numbers coming up today from the two OMCs. But moving on, the world's slowly but surely shifting to electric vehicles, and graphite electrode manufacturers are making the most of it. Well, a key component of the battery cell, players like HEG and Graphite India have posted healthy growth in the numbers. But there's one factor actually that has been bearing down on these graphite manufacturers, and that's their key raw material, which is needle coke. Nikki Mirchandani is here to put things into perspective. Nikki, over to you.
Thanks, Navneet. I'm going to start off with the pain point, which is needle coke prices. As of now, FY17, the prices were around $650 per ton, which further rose in FY18 to $804 per ton, and now effectively Q1 FY19, they stood at around $1,440 per ton, which is almost a 75 to 80% sort of a growth that we've seen in just one quarter. In fact, if you look at the Jefferies estimate, FY19, the needle coke prices are estimated to be around that $3,500 per ton level, which is more than double than your current level, and also is expected to rise further to $3,800 per ton in FY20 and 21. So we're definitely looking for cost pressures. Management of both these companies, HEG and Graphite India, have guided the same in their con call and their earning presentation. They've said that the full impact of rising prices have yet not factored in, because they work at a lag of 6 months. Impact of higher prices may be felt in the second half of the financial year, and they're seeing 100 to 150% kind of rise in prices in FY19. What might offer some respite in terms of needle coke or the cost inflationary pressures for these companies? Phillips 66 has completed now, it's the world's largest needle coke producer. It has completed a needle coke debottlenecking process, and we expect the supply to be higher in the domestic market by the end of the calendar year. Till then, we can expect some temporary blip in terms of their earnings. But if you look at the performance that we've seen for Q1, it's robust. Graphite India revenue 5 times up, HEG is more than 8 times, EBITDA 38 times higher for HEG, and for Graphite it's 52 times. Also, if you look at the margins, 75-73% for both of these players as compared to 11 and 10% that we saw in the corresponding quarter of the previous year. Profitability, it's a turnaround situation for HEG, and Graphite, it's a multifold jump there. What management of these two companies over the con call and the earning presentation have also said that they expect the demand growth outlook to remain at a fast pace. Capacity utilization here on, which currently are around that 80% kind of level, are expected to rise further, leading to operational efficiency for these companies. And the legacy contracts are ending, which means that the contracts which were signed on lower spot prices, they're going to be ending. If the new spot prices, which are higher, are soon going to start reflecting into the realizations of the company. Road ahead, well, all the top producers of graphite electrodes across Tokai, Graphtec, Showa Denko, they've all predicted healthy growth, a robust growth outlook for the industry. Jefferies, in fact, has raised the realization to $14,500 per ton from $12,500 per ton prevailingly. And as I mentioned, realizations have already, the spot prices have already picked up, because of which we might just see a bump up in realization for the next quarter.
Okay, Nikki, thanks a lot for bringing all those details. And both the graphite makers in today's trading session, HEG as well as Graphite India, have seen some strong gains. In fact, HEG sitting with gains of nearly 8% and Graphite India almost up 4.5%. Remember, as Nikki highlighted, the concern is the availability of needle coke. If the production for that one goes up, definitely they can ramp up their capacity utilization levels from 80 to almost full capacity, which we'll get to see in the coming quarters. But moving on, mutual funds saw some redemption in the month of July, with equity mutual fund flows registering a decline for the third straight month. Data released as per AMFI. And Jayesh, this is coming at a time when markets saw some recovery in the month of July.
That's right, Navneet. In fact, that's a surprising thing because the market did scale up new highs, but there are some bit of worrying signs that have emerged if you look at the flows. Maybe it's too early to call, but definitely 3 months on the trot that we have seen a decline in the equity flows. But more importantly, let's first have a look at the total flow picture that we have on the screen. So for the month of July, we had an outflow of just over about 32,000 crores as compared to a 46,475 crore inflow for the month of June. Now, if you have a look at this line chart, it shows you the trend for this entire year, and as you can see, it's been rather volatile, with an inflow in April as high as 1,37,000 odd crores and outflows matching 50,000 crores as well for a couple of months in March and May as well. So overall, it's been quite volatile, but this volatility has been on account of the liquid flows. And for this month itself, out of that 32,628 crores, some about 31,000 crores outflow was seen in the liquid category. So not much to read into that, but as we go ahead and look at the internals in the numbers, if you consider only the equity flows, which is pure equity and ELSS schemes, so you can see that July also saw a dip towards 9,452 crores. Now, this is the third straight month that we have seen a decline in the equity flows, and it is the longest monthly declining streak since April 2016. That's the worrying sign over here, and you see that it has been a steady decline for the equity flows. Not only that, the 9,452 is the second lowest number that we have after March 2018 as well. Moving ahead, where the actual pain came in, that was the balance category. Now have a look at this last number, which is the July 2018 number. That stood at about just 287 crores. This too has matched what the equity flow trend has been. 3 straight months of declines, no respite coming in for the balance funds as well. But as far as the total AUM picture is concerned, that came in tad flattish at about 23.05 lakh crores as compared to 22.86 lakh crores, still a little away from the lifetime high that we had seen in the month of April, which was at about 23.25 lakh crores. But if you narrow this down to equity AUM, now you'll see that there is a bump up from 7.3 lakh crores to 7.7 lakh crores, which is 5.5 or 5.6%. But as you were mentioning, Navneet, that the market itself in fact went up 6%. That is for the Nifty index, which broadly outperformed the mid cap and the small cap index. So that 5.5 or 5.6% increase looks a little tad bit below what the entire market itself has done. So maybe it's too early to call, but some signs of worrying definitely present in the market.
Thanks a lot, Jayesh, for putting things into perspective. Well, that's a very important data point, which Jayesh has highlighted, that we've seen less of flows coming into mutual funds. And remember, this was one space which was buzzing, in fact, post demonetization. A lot of money was flowing into it. And as we've been mentioning, Indian markets are still underpenetrated. So a lot of savings, financialization of savings theme, which everybody was talking about, was clearly visible in the flows that one was seeing in the mutual funds. But Neeraj, looks like in the last 3 months, there are some redemptions which are taking place.
Yeah, and balance funds, I think that's the category, really, the tax advantage going away from ULIPs versus balance funds.
Is it related to that dividend which came in during the budget?
No, so the fact that there is long-term capital gains taxation applicable and ULIPs have been kept out of it. So the tax arbitrage or a tax advantage that mutual funds had and the returns that balance funds used to provide was adjusted for tax was a lot better than what ULIPs would give. Now ULIPs are out of that purview, and which is why now the difference is slightly lower, is what industry sources tell, and therefore I think the last 3 or 4 months ULIPs probably have seen fairly decent movement of inflow into funds, but balanced funds have lost out.
If this trend continues, this may not be a great sign for the AMCs.
So yeah, balanced funds were getting a lot of money, yes. Now whether or not extrapolate to this being a continuous factor, or at some point of time people realize that balanced funds notwithstanding, pure play equity funds might be a good choice, or some other categories, and let's wait and watch if that happens. Also remember, mutual funds are now launching AIFs in a meaningful way. We've had Franklin Templeton launch one today, a bunch of others. IIFL has some 15,000 crores worth of AIF money as well. So institutions, the AIF, and not just portfolio management services. Let's see if all of that get in the big money to be invested. But 8,000-9,000 crores, I think, would probably be a more sane number that one should expect now. Probably the days of 20,000 crores are gone.
I was just about to say there were months that we were seeing flows of almost 20,000.
But they were also a part in debt, because balanced funds would not invest the entire money into equity. So there was also some debt flow, which is kind of gone away. Anyways, 2:30, if we have our guests, we should try and go to them as well. But just before we do that, remember, we were talking about IIFL. They are in the midst of splitting the businesses and trade 3 individually listed entities. But more importantly, what's the vision ahead over the next 5 years? The founder and the chairman, Nirmal Jain, says that this decision was driven by the fact that each has its own business model and requirement, and not only to unlock value. A small slice of my conversation with Nirmal.
So I think we have got approval from most of the foreign regulators and RBI, and we are waiting approval from SEBI and stock exchanges. I think that they are linked, so they basically get approval from SEBI. So as soon as that is done, then we can file it with NCLT, and then there's a process of shareholders meeting, creditors meeting. So I think the process can take about 4 to 5 months more. It's really because NCLT is also overloaded with many other matters. So. Sure. Maybe, say anywhere between 4 to 6 months.
Okay. And Nirmal, just one more routine question. The whole process, I would believe, that a promoter group takes when it decides to demerge the businesses is, aside of giving shareholders who might want to invest in individual business a chance to do that, also some bit of value unlocking. Would you believe that this, by the natural course of the 3 businesses getting listed separately, will immediately create some value unlocking, and then 2, better discovery of each of the valuation multiples over the next few years?
So I think I won't speculate that there'll be value discovery and in terms of stock market capitalization, immediately on a demerger. And that has not been the objective also, to be very honest.
Okay.
So historically, if you see in Indian context, most of the promoters have tried to keep control through a convoluted structure of subsidiaries and associate companies. So very simply put, you can own 50% of A owns 50% of B owns 50% of C. So your economic interest in C is only 12.5%, but your control is 50%, or maybe 51%, whatever you. So we thought about it, and we realized that the world is changing. The way the media regulators are looking at the companies, they want to have a clean, transparent structure, and your economic ownership should mirror the control rather than anything else. So, and if you have a control with the shareholders, which are the majority shareholders together, their approval, then it should be on merit. So I mean, that's how the structure is evolving. Given that, also the regulators are different for 3 companies, and 3 businesses are very distinct in terms of culture and the kind of people that they hire. Also, our model always has been that we try and incentivize people with equity. Yes. So the top management team is driving the business, then they better be incentivized by the businesses that they're driving, and not by equity of a conglomerate, and they should have visibility of listing of the companies that they are managing. Sure. So these have been the key drivers, and also the balance sheet becomes simpler. So whatever leverage you take also remains contained in 3 separate entities. And at the same time, at the time of listing, at least me, Venkat, will remain promoters of all 3 entities. Karan, Bhagat and Yatin, they will join as promoters of IIFL Wealth.
Right. Okay. Just one small other question as well before we move on to watch each of these businesses do, is that when you raise that money funding for the wealth business, I think IIFL holding shareholding in the businesses at combined businesses was probably 51% odd. Do you think it'll probably stay that way closer to listing as well, or do you have any fundraising plans in any of the businesses until?
No, I don't think we have any fundraising plan till listing now.
Okay.
So I mean, there's no fundraising plan, because fund will need is typically you need fund only for NBFC companies.
Yes.
So we have NBFC in Wealth, which is a subsidiary of our Wealth, and we have one more NBFC, which is Retail NBFC. So in this Retail NBFC, we raised money from CDC, $150 million, just about less than 2 years ago. So I think that money should be good for next 12 to 18 months or maybe 24 months. So a fundraising is unlikely till listing.
Okay. Now let's talk about each of these businesses in well. And again, not just what will happen over the next 6 months.
Value creation question.
Okay, let's do that first.
So, we are not concerned with the value creation in the short term. That's what I meant when I said that listing, what is the market cap, that least bothers me. And that's not one of the drivers for any decision-making process in our board of management. But what matters is the three businesses can be simplified and they can grow faster. And that is the theme of our annual report. If you get a chance, have a look at it. Then what will happen that if they grow faster in a more sustainable way, then obviously it will create a lot more value for shareholders and stakeholders over a period of time. But that is not something which is an event, which is a listing event is a value. No, that's not the objective. But say when you look at 2 years, 3 years, 5 years down the line, three of them together should create more value than what the aggregate could have created otherwise.
Can you tell us about the three of them? Let's start off with the NBFC business. I mean, what do you see? The common parlance is that the runway of growth is so great that 25, 30, 35%, depending on the aggression of the management, should not be a problem for the next 5 years at least, if not more. Where are you out here on this argument?
So our NBFC business is, the company that's going to get listed is NBFC, has a subsidiary company which is Housing Finance, and one more subsidiary company which is Microfinance. So our business is Housing Finance, Microfinance, and certain lending. But all these businesses, the common element is that we basically focus on retail lending, small ticket lending, and digital delivery. Now, we are seeing that a lot of progress has been made in technology and digital delivery, as well as data analytics and artificial intelligence, which will allow you to reduce your operating cost, improve your performance in terms of quality of credit, and also collection, and still reduce the cost. So that's a great opportunity because this bottom of the pyramid, we talk about, say, microfinance, where there's an income generating activity at a small entrepreneur or people who borrow 15,000 or 20,000, 25,000 rupees and do. From there to, if you look at our SME business in NBFC, where ticket size is about 4 to 5 lakh rupees, again, we are talking about small shopkeepers, hawkers, or, I think that is where India has to grow rapidly. And, almost 80% of the employment is generated through informal sector. And that is, they need capital. They were starved of capital. Why were they starved of capital? Because the banking system did not have the wherewithal to do the credit assessment and reach out to them. They won't have the income document. They can't afford an advisor. But now with technology and with the last mile connectivity of NBFCs like ours, we can reach out to them. So I think the overarching theme in our NBFC business is small ticket and digital delivery. So even if you look at our housing loan or home loan business, our average ticket size is just about 20 lakh rupees. So typically we are funding houses of less than 25 lakh rupees in terms of value. So we aren't really looking at the houses here in Bombay, which can be worth crores of rupees, but we are looking at houses in small towns, small cities or suburbs, or far off suburbs, where ticket size is small. The end user is buying the house and he's going to repay out of his income and out of his savings. And I think that's the model that we want to focus on.
Okay, let's move on and talk about markets and get you some technical ideas also going. We've got our experts ready. Richard Chen of Angel Broking joins us on the show, and we've also got Brijesh Singh of Stock Access. Good afternoon to both of you, gentlemen. Richard, if I could come to you first, we've recorded fresh highs once again in today's session, and the next resistance which everybody has been talking about is the 11,500 mark. Currently, even the Bank Nifty, which did manage to cross the 28,000 mark in trade. What's the call that you're taking on both the indices?
Yeah, hi, very good afternoon to everyone. Yes, if we see the recent past, then it was, I think, in the mid of July where we had seen a breakout in Nifty and the Bank Nifty index from a consolidation phase. Post that breakout, last couple of weeks have been much on expected lines, and 10,440 were the targets that we were looking for, as those were the 127% retracement of the previous corrective move. Now in today's trading session, that 127% retracement target has been met. Secondly, if we observe the hourly charts, that is some a bit lower time frame charts, then although the Nifty has made a higher high, the RSI has formed a lower high. In technical analysis, we term this as a negative divergence on the charts, and such negative divergences usually leads to, usually stops the momentum, ongoing momentum. So I think going ahead, we should see some sort of profit booking. Now, when I come to certain heavyweight stocks, then there are no signs of reversal in trend. So we may not have a trend reversal over here, but definitely some sort of profit booking in stock should be seen. And as far as the indexes are concerned, I think that both the indices, Nifty as well as Bank Nifty, would see some time correction or a consolidation phase for next at least 1 week. So at current levels, we are advising our clients on the index front to book profits on the long positions, which we have advised to take long on in the midst of July. And here on in stock specific also, one should start booking profits, and the buy on dip strategy should be there because the broader trend for the market still continues to be positive.
Okay, buy on dips, but currently one can look to book profits if they were long on Nifty or on Bank Nifty. Brijesh, do you hold the same view? Would you advise people to book profits at current levels, or do you see higher levels?
Good afternoon to everyone. See, no doubt what Ruchita has been right, that the Nifty had moved up to the level of say 11,450, and after that it has moved down, and with the price making the higher high, but whereas the indicator or oscillator on the hourly chart making a lower high, which usually gives the sign of a profit booking. So no doubt the profit booking would be coming, but overall the trend is being intact. It's in the bullish ways because the previous swing high, it has not been broken. So till it doesn't break, the trend would be up. So like 11,171, if I'm not mistaken, that was an all-time high. So till that level has not been broken, so every dip can be used for a buying purpose. But if someone has a very short-term view, say for a couple of days session, then 11,370, 11,360 would be the level to watch out on a closely basis. So that would be as a support. I'm looking for the momentum to continue. If that thing broken, then we might see a 100 and 150 points of correction more. But till that doesn't break, I'll use this opportunity for a buying purpose. Anything below 11,400, one can look out for buying Nifty. I'm talking about Nifty spots level, with keeping a stop loss at 11,370 and look for the target of 11,505 to 11,510 odd level.
Okay, specific stocks. Brijesh, let me come to you first.
My stocks, which I'm looking is Ajanta Pharma. After trading above the previous swing high, that was 1120 zone, the stock has been consolidating above this zone, and with the increase in volume, so that indicating the positivity for the stocks. So at the present juncture of time, if I'm not mistaken, it is somewhere around 1185 or 1190 zone, if I'm not mistaken. But when I have given the call, it was somewhere around 1170 zone, somewhere around. So any dip somewhere around 1170 or 1175, one can take a buy call in it with keeping a stop loss of 1140 and look for the target of 1225 to 1230 zone in a 3 to 4 trading session.
Ruchit, what about you?
Hello, is this better? Perform. So IDFC is one of the stock that we are recommending to go long on. Purely because of the reversal pattern has been formed on the daily chart, and the inverted head and shoulders breakout was seen in Monday's trading session, that too with good volumes. Prices are currently trading near the neckline, so the risk reward ratio is favorable. One can go long with stop below 46.70 for target around 54.60 in short term. And my second call is a buy call in RBL Bank, but this is a conditional call. One needs to buy only on a breakout above 576. Now, why I've chosen RBL Bank? Because if you see within the banking space, RBL is one of the outperformers in last 4 to 5 months. Secondly, last 2-3 weeks has been a consolidation, but this consolidation just seemed to be a time correction within an uptrend. So if the prices break above 576, that would indicate the resumption of the broader degree uptrend. So buy above 576 with then stop below 562, and we can then expect around 596, which were the earlier all-time highs of RBL Bank.
Okay, so those are a couple of strategies coming from our technical experts. Let's just pull up Lupin once again. The numbers came out a while back, disappointing set of numbers, way below what the street was estimating, and now the stock's sitting with cuts of nearly 5% in trade. Ruchit, would you short Lupin at current levels after it's fallen nearly 5%? Or let's say if somebody had shorted just around the time when the earnings came, is it the right time to book profits?
The stock is already down by 5%, and pharma as a space is not in a downtrend now. So I won't advise creating fresh shorts over here. Definitely today volumes are quite high in Lupin post results, but usually we see on the results day such high volumes coming in. If existing long positions, short positions are there, then 800 would be the level where the short position should be covered, because a rising trend line support would come around 800. So existing short should be covered when the price comes around 800 in spot.
Okay. Well, I was just looking at stocks which are by and large doing okay for the last few sessions, and there are 3 names that stand out and stand out very, very well. One of them is VIP, up another 3.5%, 4% and nudging life highs today. And a couple of bounce back boys, though there's an event risk out here, Inox Leisure as well as PVR. At some point of time, the decision on those cases will come out, on the ruling will come about. And whenever it comes about, whether it comes about in the next 24, 48, 1 week, 2 weeks, thereabouts, whenever it does come about, will have a bearing on what these stocks do. But if you are trading these stocks, Brijesh, how would you approach them? PVR, Inox, and maybe a VIP?
See, VIP no doubt is a, it's been trading on higher top and higher bottom formation on the daily charts and that too with increase in volume. So that indicates the, the strength of the counter has been intact on a bull side. So right now 570 has been trading. So I'll say this, and the stock till it trade above 540. I'm talking about very swing basis point of view. Till the stock has been trading above 540, I'm looking stock, going all the way to 610 to 620 zone in a 4 to 5 trading session because the momentum has been very strong and with increase in volume. So that indicates the time it would be, going 600 would be taking very less time. As far as PVR has been concerned, on a daily chart, the stock had bounced from a level of 1100 and right now the stock is quoting at 1251. At this juncture of time, I would not be suggesting for going for the long side. Any dip somewhere around 1220 or below that, then only, the risk reward ratio would be in your favor. So anything below 1220, one can take a buy call with keeping a stop loss of 1190 zone and then look for the target of roughly around 1285 to 1290.
Okay, in fact, PVR, remember we just highlighted at the start of the show that it's bounced back quite sharply. Just it touched its 52-week low in the month of July around the levels of 1060, and from those levels, it's moved nearly 17 to 18% in trade. Well, let's bring in our fundamental guest on the show. We're joined by Lancelot D'Cunha, Chief Investment Officer at ValueX, who joins us on the show. Hi, Lancelot. Good afternoon, and thanks a lot for joining us on Bloomberg Quint. I'm going back to the topic of pharma. We were talking to our technical analyst and taking their views. Lupin has fallen sharply post the numbers which have disappointed. On one side you have Lupin, and on the other side you've got Stride Shasun too, which came out with the numbers where margins did see some bit of expansion. What have you made of these earnings?
I think it was on expected lines. We didn't really expect Lupin to come out with better numbers immediately because the pricing pressure in the US still continues. And we've seen from the numbers that it has impacted, the margins. So despite the fact that there could be, higher revenues, you're still seeing a significant pressure on the EBITDA as well as the net profits. So I think this has been a trend with most companies who have, exposure to the US markets. And this situation is likely to continue for at least 2 to 3 quarters because companies like Lupin are introducing new specialty drugs, but it will take time before we see these new product launches in niche product spaces begin to add to the margins. So, I guess that has the prices sort of reacting to the results, and we could see maybe a bit lower levels. But if you look at this has continued, for the last almost 3 to 4 quarters. Initially, it was the pressure of the US FDA on Indian plants in India, which I think most of the companies, including Lupin, have been able to address. And now the plants having been cleared for the US FDA export, etc., it is the requirement now that the markets over there need to absorb this competitive pressures and generate sales at higher margins. So I think that process will take some time, but at least we are seeing the bottom probably of the pharma cycle.
Okay, let's see if the pharma cycle has bottomed out or not. Just want to address few earnings. They came a while back from the broader markets, and we've seen correction for stocks like Greenply Industries, where profits for the quarter fell nearly 22% at 24, coming in at 24 crore. And look at that sharp fall which Greenply had. The other one was TD Power. That too, the company posted a loss. However, the losses on year-on-year basis have definitely come down, but it's still 8 crores versus 21 crores. And TD Power also sitting with cuts of 4%. 6%. And the other one which came out with the numbers was Nesco a while back. And there too, if you go by the earnings, the profits were at 36 versus 41. And clearly all three earnings don't look that great and the stocks have reacted negatively. Lancelot, if you track any of these stocks, or besides that, there were other weak set of numbers from the likes of Mphasis. Well, you also had Edelweiss, which is corrected, something like Mirza International. Anything among these earnings which surprised you? Because we've seen negative reactions coming in with regard to stock prices.
Well, I think I don't track Mirza or the the other one. The Edelweiss is one that I do track, and although the numbers, the stock has fallen, I think the longer term outlook is still good, and I think that probably any fall in the market price should be a buying buying opportunity for Edelweiss, because Edelweiss continues to grow its business systematically, and we will see significant growth over the next 2 to 3 years. So I would be positive and look at opportunities to buy into Edelweiss on any fall in the price.
The insurance side of the business, does it worry you? Because if one were to look at the numbers, Lancelot, this time the losses from there have widened to almost 80 crores. And there was a time when you were looking at a bottom line growth of somewhere about 40, 50. This time it was just about, I guess, 15%.
Yes. So, insurance is more of a longer term business, and while, expenses do grow, the business side of insurance also has a huge opportunity, and you will see that improve over a period of time. So once the gross income crosses the expenditure threshold, then any incremental business just keeps adding to the EBITDA. So I think Edelweiss insurance business hasn't yet reached that level. Once it starts moving ahead on a positive track, we will begin to see the benefit of the insurance companies' EBITDAs creep into the valuation as well. So that is not really a significant concern, because it was a little bit expected that insurance business is going to be a long-term business. It will take a while before it can actually start to generate profits till you reach a certain critical mass. So in the meanwhile, obviously the company will have to add capital to the business and grow its business a bit more. But it's a matter of time before it starts achieving profitability.
I'm wondering that there are these NBFCs which have some fund-based, some fee-based streams, and so essentially some are, for simplification viewers, some are lenders, pure play lenders, and some have a bunch of other businesses along with it. Now, Motilal Oswal, the expertise is fund management and securities. They've now had Aspire, which has been a thorn in the flesh for 3 or 4 quarters now, and that's brought down the valuation for them. Very strong stock, Edelweiss generally. The insurance business, they're doing very well on almost all the other things which are lending related. Insurance is somehow not clicking for them, and now for good,
which is weighing on the consolidated numbers.
And then you look at just pure play lenders who are not doing anything else, but essentially in one side of the business, and they continue to do well. Bajaj Finance at 2804. It's hitting new highs today.
Yeah, I don't know if you should compare that stock to the.
It's the right. Okay, I mean, you look at almost any of the others. I mean, forget the trucking finance companies, but the other lenders, almost all of them are growing their books because the demand for credit is just so large. Yeah, so I'm saying 1 or 2, auto finance companies, specific pockets notwithstanding, almost everybody else, the growth is just looking fairly robust and solid.
Plus, I think people are only willing to buy stocks where there's premium now, because we've seen, all these stocks, the valuations are not cheap, and Bajaj Finance has been inching higher like every single day, touching fresh highs.
Yeah, but quarter after quarter, they're delivery.
Quarter after quarter. Plus, they've been performing. I mean, I don't know if it'll be right to call them the, like you say, HDFC twins. They've not disappointed you in the last 10 years. Bajaj is just following that route. Look at the returns that both the stocks have given you in the last few years.
You bet. I buy Lancelot's point. It's one bad quarter. Things could well improve, and Edelweiss has a lot of arsenal in our other businesses to come out and start smelling like roses again. But just look at the others. Just wondering, would you be a buyer in a Bajaj Finance currently, Lancelot?
Well, I think when the company is growing so fast, while the company is growing fast, I think the the P multiples or the price to book multiples are also expanding at an equally fast pace. So that gives you a bit of concern, that if at all at any point in time, even if there's one quarter of disappointment, you could see a very swift or severe re-rating of the stock. So it may be advisable to, I would look at it only if there's a price correction and maybe a substantial price correction, because while the long-term business is strong, it's also important at what kind of valuation you are acquiring the stock, because then your returns, if you acquire it at a lower valuation, your returns could be higher. Whereas if you acquire at a higher valuation, your returns would be consequently lower. So I would wait for some correction to happen in the market or in the stock price, and then really look at it for adding to the portfolio.
Okay, Lancelot, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. Interesting thoughts there from Lancelot Tikana on, well, some of the financial names. Just before we take a break, since we are talking about these financial names trading at, well, either highs or lows of the day, if I can come to you, Ruchit, a trade, if you were to take one, would you take one on Edelweiss or would you take one on Bajaj Finance?
I think in terms of outperformance, certainly Bajaj Finance is one of the stock which has continued its outperformance, and that too, if we see the recent trend, then the up moves have been supported by good volumes, where the corrections are more of time correction rather than price correction. So I would rather take a buy call in Bajaj Finance even at current levels from a trading perspective, as long as there is no reversal sign. 2700 and 2700 is now the support base, so stops could be placed below 2700 for fresh long positions as well as existing long positions, and we could see targets beyond 2900, 2950 quite soon.
Okay, that's a buy on Bajaj Finance. Brijesh, any thoughts on Jet Airways? That's touched fresh lows in today's session. It's down another 4%. I know it's also in the F&O ban, so definitely one cannot initiate a fresh short position. But how are the charts looking for Jet Airways?
See, overall, the trend has been down, and the stock has broken the previous swing low that was of somewhere around 330, and after that, it's been moved down with increase in volume. At the present juncture of time, 303 to 305 would be acting as a resistance. Right now, the stock has been quoting at somewhere around 282. More pain has been left. I'm looking stock touching 270 or below that. So right now the target would be somewhere around 270, and the resistance would be somewhere around 303 to 305. Anything above 305, still, the tough resistance to cross would be 330. That 330 has to be crossed on the closing basis. Then only we can say the short term and the medium term on the downtrend has been completed and the stock can reverse. So still the stock has been trading below 330. There would be chances that the stock, would be going down. So at the present juncture of time, 303 and 270 would be the target which I am looking from a chart point of view.
Okay, that's Jet Airways for you, 4% lower, and I think even Indigo has seen some bit of correction in today's trading session. But okay, we'll try and get some more views coming in with regard to some of these stocks. Reliance, by the way, and even ONGC, both the stocks right now are your top gainers on Nifty. Reliance has crossed the 1200 mark, and ONGC is also sitting with gains of 2%. Ruchit, would you take a trade on ONGC at 171?
Frankly, it's a very slow mover, and if we see the recently, there has been low top, low bottom structure formation during month of May and June. So on every up move, there would be resistances. So I don't think there would be a swift up move in the stock. 175, 176 continues to be a resistance. So I think I would rather avoid taking a trade in ONGC at current levels. Comparatively, as you said, Reliance has been continuing this outperformance. The stock is trading at its all-time high, no signs of reversal. So I think it's better to stick with the one which is continuously outperforming.
Okay. Stay on, German. Just before we hit that break, though, a set of numbers that we need to talk about, and that's APL Apollo Tubes. The revenue is up 45%, PAT up about 21%, EBITDA gain about 38% to 106 crores as well. Margins stable, 6.5% versus 6.8%. Let's get in the management. Mr. Ashok Gupta Johnson to speak about the numbers and the outlook ahead. Good evening, Mr. Gupta. Thanks so much for joining in. The top line seems to have grown very well. What are the factors that have led to this?
Our top line has grown by about 44%, consisting of two parts. A, the volume, which has grown by around 14% year on year for the quarter. and the balance impact is because of the increase in raw material prices. Steel prices have been rising continuously for last 1 year, and because of that, there has been significant increase in top line apart from the volume growth.
Okay. What about the margins, which have largely remained flat for the quarter, Mr. Gupta? What's the guidance that you can give us for the remainder of the year? Do you see the margins being around the current range of almost 6.5%?
So if we observe for past number of quarters, our margins have been ranging from 3,100 to 3,500 rupees per ton, which varies between 6 to 8% depending on the raw material prices. And we have been maintaining this margins for last couple of quarters, and I think the same should continue in days to come. We are trying to focus on value-added products, thereby hoping that our margins should improve. At the same time, because we are also penetrating into newer markets, so our average margins will remain at the current level only.
Okay, and what about the finance cost? I think that's gone up both sequentially as well as on year-on-year basis. If you could tell us what's the net debt on the books, is it long-term debt or the working capital debt?
Our debt has gone up primarily because we have increased our inventory and reduced our creditors. We have increased our inventory, so as you may perhaps be aware that in the first quarter there was a lot of discussion regarding change of hands among the steel producers, mainly Bhushan, and Bhushan is a big supplier to us. And due to uncertainty, we decided to take an insurance and increase our inventory of raw materials. So we had increased our inventory of raw material, because of which our working capital needs have gone up. That's the basic thing. So our base increase has been mostly in the working capital, not in the long-term debt.
Mr. Gupta, final question from my end at least. What's the guidance that you can leave us with for the rest of the year?
I will say that the industry is good. Steel is a good product. It is replacing wood as well as cement. So demand will continue to grow at around 8 to 9%. We have a big capacity available with us. So we should continue our growth trajectory. Because of the base effect, the increase may not be in the same ratio of 20-25% which you are used to. But we will continue to have good growth and will continue to have our current margin levels.
Okay, Mr. Gupta, we leave it at that note. Appreciate you joining us today and taking us through your June quarter earnings, where margins were largely flat, but good growth seen on the top line. The stock's not doing too much in trade. It's down just about 1% right now. But moving on, the National Stock Exchange is celebrating its 25th anniversary. The country's largest equity exchange is also moving towards turning itself into an universal exchange on October 1st. Vikram Limai, the MD and CEO of NSE, says the exchange is also not averse to acquiring another exchange, provided it's a strategic fit. Sajid Mangat started his conversation with Limai with a question of how NSE plans to increase the equity participation in smaller cities in the country. Listen in.
So actually, if you look at the data, even as it relates to exchanges, over the last couple of years, we've added a significant number of retail investors, and more than 30-40% of incremental investors that we're getting into the markets are actually coming not even from the top 100 cities, it's beyond the 100 cities. So retail participation and penetration has certainly broadened and deepened over the last 2 or 3 years, and I think it's a sustained effort in terms of investor education, awareness, etc., that everyone is doing. And going forward, you will see more retail participation, not only directly but also indirectly, which is what you alluded to in terms of the development of the asset management industry. And so I think we have to continue to make efforts in broadening and deepening the equity culture, and that is an ongoing process. I mean, I think we have made progress, but there is a lot more that can be done.
That's right. The markets have gone from being individual-led to institutionalized over a period of last 2 decades, and we are looking at more institutions coming in. I heard you saying in the conference as well that we need to have more institutional participation in these stock exchanges. How do you bring that in?
On multiple fronts, and across different segments, you need to have more institutional participation. So even in the equity segment, if you look at the participation of insurance companies or mutual funds in the derivative space, it's very low. Likewise, if you look at the bond markets, then whether it's insurance companies or pension companies, right now they're largely participating in AA and higher rated paper. So you have to get more institutional participation in other parts of the risk spectrum as well, beyond AA, AAA. So there is a lot that can be done on multiple fronts. Even in the commodity space, you can get more corporate participation in commodities from a hedging perspective. Most of the large hedgers today are hedging their commodity risk offshore, and you need to bring more corporates to participate in terms of hedging commodity risk domestically. So all these markets need to develop, and I think institutional participation is exceedingly important for market development.
I was getting to the next question on commodities as well, because you have universal exchanges coming up from October 1st onwards. There is also a plan of extended trading for derivatives on your platform from October onwards. Where do you see your focus going on with respect to commodities, and are the Indian markets ready to take on extended trading as we go forward?
So on commodities, as we've said, we will launch commodity contracts from October 1st, which is the SEBI regulation in terms of when universal exchanges can become operational. And we are in the process of getting all our approvals from SEBI to begin commodities from October 1st. Our plan is to launch non-agri contracts in bullion, metals and energy. And then over time, we will get into other products and other areas. As it relates to extended trading hours, as we've said, that again is available from 1st of October up to 11:55. And that again would be in the equity derivative space that we're going to be launching. Obviously, there's been feedback that has been taken from market participants, and you will get different views on that. We will have to see how it evolves, whether volumes pick up or not, and what it means for brokers and market participants and investors in terms of extended trading hours.
As you go across to different classes of investment, whether commodities, bonds, WDM, are you looking at inorganic growth as well in your next journey, next 10 years of journey, looking at going overseas? You made an attempt to go to Bangladesh, that was not successful, but are you looking at other regions where NSE can go out and set up the exchanges?
We are not obviously averse to looking at inorganic opportunities. If we believe it's a segment we want to grow and strategically an inorganic opportunity makes sense, we will certainly explore it. Even as it relates to international opportunities, if there are opportunities to participate from an investment standpoint, we would be willing to consider those, as we did in the case of Bangladesh. So we are very open to looking at inorganic opportunities for growth.
At inorganic opportunities in the commodities market in India, commodities derivative markets in India, there have been reports about you've been in talks with other exchanges, especially MCX. I know you have been denying it, but if opportunity comes in, will you be able to look at that kind of opportunity?
So it's not about denying it or anything. It's a situation where MCX is a listed entity. They have already filed a statement relating to the status of this matter, and as a listed entity, they would obviously make appropriate disclosures, and so you have to go with the disclosures that MCX has made. It would not be appropriate for me to comment on the matter when a listed entity has made full disclosures on that matter. As I said, we are not averse to inorganic opportunities if it makes strategic sense, and that holds true whether it's domestic or international.
All right, that was Vikram Limaye of National Stock Exchange talking about a whole host of things which I think the market will be waiting for, whether there will be extended trading hours from October 1st or not with regard to the derivatives segment, for which I think they've already applied to NSE. But let's see, I think even their IPO is still pending because of the co-location issue. Markets are still at 11,445, so we are staring at almost 0.5% gains today, which is not bad at all. And Bank Nifty has scaled the mark of 28,000 for the first time in today's trading session. Well, on that note, we'll take a short break here and countdown. Don't go anywhere. We'll get you the Fab 4 stocks on the other side, and also at 3:15 p.m. we tell you what the dealing rooms are recommending in trade, and obviously some closing strategies from our technical experts. Stay tuned.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Aegons of business never stop.
RP Sanjeev Goenka Group, growing legacies.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
All right, back with Countdown right here on Bloomberg Quint. Just 18 minutes left for the markets to shut. Bunch of editorial pieces before we get in the next guest on the show as well. We'll also tell you what's could enter or come out of the F&O ban. Also, first up, bring you the Fab 4 stocks of the day. And Yash Upadhyay is here with his list. Let's find out what's made it to his list. Yash, good afternoon.
Good afternoon, Neeraj. So first up, we have Make Money Organics. This one's reported a good set of numbers. Their top line's grown by about 13%, while their net profit has nearly doubled to 66 crore rupees, aided by another income element of about 14 crores. But their margins, they have gone from the levels of 22% to 26%, so a big 400 basis points improvement there. The stock's up about 7%. A couple of key order wins for the next two counters. So Patel Engineering, this one's gained as much as 15% today after the company said that it had received 2 hydropower projects and 1 tunnel project in India and Nepal worth a total 2,400 crore rupees. And BEL, Bharat Electronics, this one's seen a big up move in the last 10 to 15 minutes after the company came out with an announcement that they have won a huge order worth close to 9,200 crore rupees. And now the company says that it is their highest ever single order, and it is for the supply of SLRM systems used in ships. Lastly, we are also looking at the graphite electrode maker, so Graphite India. This one's locked in an upper circuit of 5%. HEG India too. HEG is also up about 8 or 9% on the back of heavy volumes. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of today. So some of the other stocks, I guess, which have gone up in trade are the likes of United Spirits. Pull up that one. It's trading above the mark of 600 right now, sitting with gains of nearly 2.5%. United Spirits, there you go. It's almost at day's high. And also, I guess, some traction being witnessed for stocks like Britannia and Emami. They too have seen some bit of buying, I guess, coming around the lower levels. So not really, but Emami is now almost, it went up, but there was some bit of selling pressure, I guess, at the top as well. So watch out for all these stocks. But time to bring in Siddharth Sidani, Vice President for Equity Advisory at Anand Rathi, who joins us on the show now. Hi, Siddharth. Good afternoon, and thanks a lot for joining us. Since we have very little time, I'm just going to ask you the earnings which have come by so far. Anything which has surprised you or caught your attention?
Good afternoon. Thank you for having me on the show. Well, in terms of earnings are concerned, there are a lot of surprises which we've seen in the retail space. Also, we've seen surprises like of company which is posting Aditya Birla Fashion. In the cement space also, there are a lot of surprises which we have observed, like of ACC and Ambuja posting good set of numbers. Overall, I would like to say that midcaps has been doing good. We've seen broadly a jump in terms of revenues to the tune of between 15 to 20%. Margins and profits were operationally little tepid in some of the cases because of a reason of higher crude oil prices. Along with that, there are some one-off impacts on the currency volatility and the rupee depreciation which we have seen. Broadly, what I believe green shoots are already available in terms of earnings are concerned, especially on the mid-cap category.
Okay. By the way, Navneet, any stocks in the list that could enter the ban or get out of the ban?
Not really, Neeraj, but a lot of heightened activity that I've witnessed for two pharma counters, and lastly on back of numbers. On one, you're seeing fresh long positions, which is Stride Shasun. Open interest there has risen quite significantly, and the other one is Lupin, which is corrected. Remember, the margins were lower, and on all parameters, I guess Darshan highlighted that the numbers were not so good. So this one too, futures will indicate. That's going to tell you how a lot of bets are being taken on the downside, on the short side rather, for that one. And I think just watch out for Jet Airways, Neeraj, because that's in the F&O ban as of now. You can't take fresh trades, but that's touched fresh 52-week low, and it's trading below the mark of 300.
Well, okay, watch out for these two as well, but no conclusive evidence to suggest that there will be an entering or getting out of the ban. So let's leave it at that. It's 3:15. Time to get in a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Gentlemen, good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so Ajanta Pharma is one of the counters which has managed to inch up. It's up almost 4% the last time I checked. There is significant amount of domestic funds which are accumulating the counter. Pharma of late, you've seen the weak numbers coming in from Lupin, but select pharma names are seeing accumulation, like how you saw Strides. Today it's moved up on high volume, so Ajanta Pharma is something on the radar. Apart from it, Motherson Sumi hasn't done much today. It's absolutely flat in trade, but the volumes are decent. Almost 50 lakh shares have been traded, but some of the HNIs are accumulating this as a positional bet. So this counter is something, so Motherson Sumi is something that dealers are talking about. And the final stock that's been spoken about is SRF. Numbers have already come out for SRF. It came in overnight. The numbers are very strong. But if you see historically, the counter tends to react only post the conference call. Now, the conference call is there today at 4 o'clock. And the analyst community is expecting that the management commentary will be on the stronger side this time around in terms of growth and in terms of the outlook. So SRF is something that dealers are watching out for. But Yatin, what are you hearing?
Darshan, BEML, that is one stock. They reported, quarterly loss. Stock is at the day's low. Dealers indicate STBT kind of strategy on the back of weak numbers and sell flows. Apart from that, Ashok Leyland, that is one stock which is gaining traction in trade, almost 5% up for that one. Dealers again here indicate that the overall structure is positive and they have a buy on this one. And finally, Nestle, that is also one stock in the FMCG pack wherein dealers are expecting upward trend, and in general FMCG is one pack wherein dealers are slightly overweight on. So these are the few stocks which are being talked about or spoken about in the dealing rooms.
Okay, we will watch out for some of these. Nestle, interesting really. I mean, nudging those levels of 52-week highs almost every single day. And on a roll generally, I mean, there could be off days when it's come off, but more often than not, you've seen the stock do really well. Siddharth, there are FMCG companies, and then there are companies like Nestle, which probably give you a chance to buy only when there is some bad news like Maggi, nudging new highs almost every single day. Is it a stock worth an investment currently?
Well, we don't, Neeraj, we don't have a coverage on Nestle, but broadly speaking, in generic, of course, these stocks are more of a portfolio stocks which one should keep buying. Maybe a SIP route is also a good option and good opportunity for investors to keep accumulating. Along with that, if I talk about FMCG space, this was a quarter which we have seen strong volume growth across. If I talk about Marico, for that matter, if I talk about Britannia, double-digit growth, Dabur, HUL. So of course, FMCG looking quite interesting. Base effect is also one of the reasons that we have seen this kind of growth. But in terms of FMCG is concerned, I think the stocks like Dabur has a strong potential from here on also.
Okay, interesting. I think you had a coverage. Have you revised your targets on Dabur, Siddharth?
No, we are working on that. I think the earlier target was 410, which was achieved. So re-rating is still yet to come.
Okay, just few stocks which are moving around. Greenply, I remember we addressed the numbers for you, which didn't look that great. The counter is now down almost 8.5% in trade. So heavy selling seen for this one. But stocks which have gone up, Reliance Communication is up 10% in trade. Hathway Cable is up 7.5%. And also something like SL Propack, that's the other one from the broader market, which has seen some bit of buying momentum. And also Spark, that's inched higher. That's sitting with gains of 4.5%. So that by any chance, did you look at Greenply's number if you track that one? This was a space I guess most of the market participants were turning bullish on.
Well, in terms of numbers, I would say we don't cover Greenply, but in the entire plywood industry, what we believe is Century Ply looks very interesting to us because the main reasons for that is the capacity expansion in the MDF plant. Along with that, whatever the imports were, the concerns were there, I think that is also out of the way. Of late, maybe 2 months back, they have increased their product prices also by 3 to 5%, which is again giving a strong opportunity for this company. And of course, last year, post GST, the unorganized player doesn't have an edge over these players. So organized players have a strong edge. So Century Ply, for my understanding, looks very interesting. I would like to add up on one more thing here. When we are talking about plywood, we should always talk about something complementary industries also. And if I talk about Fevicol, then the company comes in picture is Pidilite. I think Pidilite in the consumption space, as we are talking in the earlier part, that consumption, how consumption are flowing. I think Pidilite is one of the company which one should keep in the portfolio with maybe target of 1345. And the business which they have newly forayed in is waterproofing and flooring business. I think this market is currently 2,000 crore, which can go to 5,000 crore in next 4 to 5 years. And this has a very big potential. Margins will be good and results were quite good. So I think Pidilite in the consumption space, home furnishing space, which is there with plywood, looks very interesting.
Okay. Let's talk about the closing strategies. And first, Ruchit, to you. What is your top closing strategy?
Yeah, from a BTST perspective, I think Reliance Industries is continuously showing strength. So I would think one should continue to ride this trend with the one which is showing strength. So Reliance can be bought with stop below 1200, expecting target around 1250 to 55 in tomorrow's session.
Okay, and Brijesh, what about you? Your closing strategy will be on?
Say I would be going with Ashok Leyland somewhere around 125 above. It's been trading previous resistance by 122 to 124. So the stock has been trading above that. So one can buy at the current juncture with keeping a stop loss of 122. Look for the target of 128 or 129. Another counter would be Balkrishna Industry. On a hourly chart, it has seen a decent run up from a level of 1220, 1225. Right now it is in quoting at 1250. One can take a buy call in it at the presence of time, keeping a stop loss of 1230 and look for the target of 1280, 1285.
Okay, that's Balkrishna Industries up 2% in trade right now. Siddharth, before we let you go, what's your fundamental pick?
Well, IT Midcap is on the run, and one amongst that is Mphasis. We like Mphasis with a target of 1350. Well, this company is into BFSI, telecom, IT, and a lot of industries they're catering to. And they are emphasizing on looking at more projects on the fixed price projects. So I think margins are quite good, because if I talk about the projections which the company is giving is 17% for FY20. All in all, the main catalyst for this company is new deal wins which the company is getting, along with strong margins. And of course, rupee depreciation will play a major role in this space. So Mphasis has come out with a buyback also to the tune of 1,000 odd crore. 1,000 odd crore at 1350. We believe that Mphasis can be bought at the current levels with a target of 1350.
Okay, great. Siddharth, one final question from my end. Any specialty chemical company that you like today? Aarti Industries is up. Yesterday, Deepak Nitrite was up. Vinati Organics had a fabulous move as well. Any thoughts here?
I think most of the names which you rightly pointed out right now, we cover. Aarti Industry, we are quite positive with this company. The kind of margins they're making, I think going forward, the outlook looks very strong in Aarti Industries. Deepak Nitrite, which you mentioned also, is one of our top preferred bets in specialty chemical, mainly because the new greenfield project which they're coming out in Dahej on acetone and proton. I think this project is already commissioned. Only the commercial production will start very soon, maybe in month of August. So Deepak Nitrite also can be bought with a target of 346. I think specialty chemical, the attention had gone, I think, some months back, but again, it is back on the radar. I think Deepak Nitrite can be the preferred bet with a target of 346.
Okay. So that maybe, hang on, maybe you have a thought on Cipla, but the numbers are out. Seem to be in line with estimates. The net profit at 390, I think our estimates were 384. So that number has come in bang in line with what we were working with. That's the only number that I have on the screen right now. We'll get in some other numbers as well. The revenue numbers.
It's 2987. That's the total income from operations so far, and revenues were expected to be in the territory of nearly 4,000 crores. Okay, I think I'll have to check whether it's Okay, I'm looking at the standalone revenue numbers. We'll have to look at the consol numbers. The estimates for the consol were at 4,027, and it's come at 4,109. That's the total income. But the total income from operations is at 3,938, so slightly just below what the street was estimating. And the profits are at 390 versus 384. The consolidated profit, Neeraj, by the way, is 445 that we're seeing.
Okay, yeah, 445 versus 408 crores. We'll get in Darshan in moments from now. Siddharth, any quick thoughts here on Cipla, the reported numbers as we have them right now?
I think as per the numbers which you are reporting, I think it looks in line and relatively better what Lupin had posted. I think Lupin was a completely a miss. So comparative to that, I think Cipla numbers looks in line. I think margins is one thing which one has to watch out for.
Just waiting for that number to come out, the margin number to come out as well. But by and large, the numbers seem to be in line with estimates. Maybe, you wouldn't even call that a marginal miss. It's about 100 crore or 90 crore lower on that base of 4,000. So that's about a 2% off from what the expectations were. So revenue is okay. I think the margins would probably have inched up a little bit. The net profit number, consolidated profit at 451. It's all looking okay so far for Cipla. We'll dissect this in greater detail once the market shut, of course. Siddharth Sedani, take a moment to thank you for joining in today and giving us your thoughts. Ruchit, Brijesh, stay on. We'll take in closing thoughts from you. Maybe try and get an analyst too on Cipla. Maybe Darshan will join in. But let's just try and close the markets currently. 0.5% up for the Nifty. 0.7% up for the Sensex, so it's good going really by and large, and the Nifty Bank 2 Navneet at 200 points is closing in almost at the high point of the day.
Yes, Neeraj, and this is record closing. Let me tell you, in the last two sessions we did breach the 400 mark, 11,400, but we failed to close above that, and today's closing is coming very, very convincingly above the 11,400 mark, so very strong closing. Bank Nifty closing above the mark of 28,000 for the first time, Neeraj.
Yeah, it is, and now shifted positions and just getting you a couple of updates right here from the pillar, and then Navneet will of course take you through all the broader market activity. But the mid caps and the small caps should come up on your screen. We discussed the large caps and it's a strong close there, but the mid caps and small caps should come up. Let's start it off flattish, ending flattish as well. 1/3% on that base for the small cap space is almost a flat close. The mid cap index absolutely flat. Let me nudge the large cap movers, and then Navneet will bring you up to speed with what's happening at the broader end of the spectrum. The big boy Reliance Industries and ONGC, both of them up about 3% apiece, so strong moves there. Bajaj Finance continues on its merry ways and nudging new highs, so good going there. ICICI Bank and SBI, a return of some of the corporate-facing banks in the session today. What's lost out? Lupin. The numbers not quite living up to the mark, and that stock is down about 5%. Maruti corrects a little bit. HPBP ahead of the numbers are down in the session today. Bajaj Auto marginally off, but aside of that, no big losers per se. The market too is ending marginally in the green because of the fact that there are no heavyweights which are losing out in a meaningful way. Lupin and Maruti, I presume, would be amongst the top two contributors as well. But Navneet, what about the broader end of the spectrum?
Not a great day, Neeraj, for broader market indices, but there were some movers here and there. So let me start off with Universal Cables. That saw good gains, in fact, in today's session. Throughout the session, the stock was trading in the positive territory, but it was just in the second half that some buying was seen. 12% higher for this one. Patel Engineering went up in trade on back of 2 orders that they won, so 11% higher for this one. Stride Shasun came out with the numbers, and good commentary also coming from Mr. Arun Kumar, the management, clearly stating that they expect better results in the second half of this financial year, but there was some bit of margin expansion seen for the quarter gone by. Ashok Leyland bounced back. Remember, the stock had seen recent lows of 105, and from thereabouts, it's been 20 rupees move that one has seen. 5% high for Ashok Leyland, closing around the day's high mark. And also going up on good volumes today was something like Voltas. Even on the future side, we did see some fresh long build-up coming up for this one. The numbers come out, mind you, on August 10, so watch out for Voltas. Hathway Cable was the other one which went up in the second half of the session today, so that's closing with gains of nearly 8.5%. On the losing side, a lot of results reaction. Greenply, we highlighted for you, the profits were down 22%, flat revenues, 10% lower for this one. Mirza International disappointed in the June quarter, and also something like Edelweiss. I think the insurance business now weighing on the consolidated profit, 6.5% lower for this one. Power finance companies, REC, PFC were under pressure in today's trade. They were one of the top losers even on the F&O side, and PNB, which is in the F&O band, remember the stock fell quite sharply in yesterday's session, was down another 3% in today's trade. Neeraj.
That's all in all looking okay for the markets today. Let's see if the momentum lasts. The picture at close is positive. We are ending very, very well. Just bring up the European indices once, just to show what's happening at that end of the spectrum. Yesterday, all the indices, all the major indices, Europe and US shut shop well. Question mark in today's session. Flattish FTSE is okay, but CAC and DAX flat, and I doubt that the Dow would be doing something dramatically large. Should be meandering in and around yesterday's close. The Dow futures absolutely flat currently in trade. You don't get a Tesla move every day. Not that that had a really big impact, but yeah, a small impact with Tesla and Amazon too out there. But yeah, the world markets are quiet, Navneet. So no big cues coming in from the global end of the spectrum.
That's right, Neeraj. But I think back home, the buying momentum continues after consolidation of 2 days. So let's check what was the participation today. That's obviously the Nifty intraday chart. And look at that. It's the closing has come at the high point of the day. Cash turnover just slightly lower compared to yesterday, but clearly, Neeraj, today ahead of the Bank Nifty weekly options expiry tomorrow, we've seen a big jump in the NSE F&O turnover of nearly 10 lakh crores.
Yeah, this is typically the options expiry day behavior, the kind of turnover. This is very large. Well, interesting trades there. It'll be interesting to see what the Bhav copy shows and what the outcome of this one would be. I mean, I'm trying to think if there were some meaningful moves, except for maybe Reliance, ONGC and some others. At least on the large cap space, you didn't have big moves. Maybe a Lupin, yeah, but aside of that, not many big moves today.
But I think overall, if you look at the index, Bank Nifty, Neeraj, has been witnessing more of open interest addition on the future side. So there are more positions which are being taken there. In fact, in today's session also, we did see some bit of OI addition. But as you said, in the Bhav copy, usually the number changes. Let's wait and watch.
Yeah, 3% OI build up yesterday, if I'm not wrong, and that continues today.
So post the monetary policy, there were 2 straight days of unwinding, but post that, we've continuously seen OI build up on Bank Nifty.
Yeah, maybe this remains the star.
And this is the first time it's crossed and closed above the 28,000 mark.
As well. Yeah, strong show. And again, I mean, while it's been divergent trends, but doing okay for now is the Nifty Bank. Final thoughts from our experts on the markets. Maybe we'll get in Darshan for a word on Cipla, but at least first the markets thereof. And Ruchit, to you first. What does this close mean for the Nifty Bank?
So Neeraj, the closing certainly is positive because we are closing around at the all-time high levels. The only thing that worrying us is the negative divergence on the hourly chart. But as I said earlier, if you look at the if you look at the heavyweight stocks, then there are no signs of reversal. So there could be a time-wise correction rather than a price correction in short term. So I think if anyone is holding long positions on the index, I would still advise that one can look to book profits at current levels. And when it comes into stocks, be very stock specific and continue to ride the trend only with the outperformers.
Brijesh, what about you? How would you view this close, Nifty Bank both?
No doubt the Nifty as well as the Bank Nifty has opened on in the day high, and that to the all-time high. Now, if we talk about the Bank Nifty, 27,700, 20,750 would be the support to be watched on for the momentum to continue. It should not get broken. And whereas on the higher side, 28,400, 24,450 would be the hurdle zone. So I'm looking at least that level to be touched before the any sort of profit booking comes. Whereas the Nifty has been concerned, no doubt the Reliance has supported it, and if I'm not mistaken, the time the show had started, that time the Nifty was been trading somewhere around 11,410 or 15 somewhere around, and after that it has taken the U-turn followed only because of the Reliance, and Reliance has closed at the day high. I'm looking Reliance going all the way to 1250. Or by 1275, 1285. So I'm looking at least that level to be touched before any profit booking would be coming. So in keeping that thing at the point of the Reliance level, Nifty might try to touch level of 11,500 or 11,555 before any profit booking would be coming.
Well, clearly Reliance contributing the most to today's moves that we've seen, and also being one of the heavyweights. If this stock continues to inch higher, we can see more of contribution coming by. In today's trade, remember, Reliance contributed nearly 30 points. So 50% gains, in fact, of 60 points today have come in solely because of Reliance. Okay, on that note, would like to thank both our technical experts, Ruchit as well as Brijesh. Appreciate both of you joining us today and taking us through your technical views on the markets. Well, on that note, it's a wrap on this edition of Countdown. It's goodbye from Neeraj and my side. Thanks a lot for watching the show, but don't go anywhere. Coming up next is we wrap the trading action for you with Agam Vakil. Stay tuned.